Why the hell would anyone trust us? They won't. Not to mention, we've chosen inflation over austerity. We're accumulating $1 trillion in debt every 3 months right now, and our bond market has been a disaster. So my feeling is that as rates have gone higher, which is typically bad for gold, it's not. It's bullish for gold. Why?
In this exclusive video, Andy Schectman unveils the shocking truth behind the recent turbulence in precious metal prices and the seismic shift rocking the financial world. From naked shorting to unprecedented global accumulation by powerhouse nations like China and Russia, discover why the old rules of the game are being rewritten before our very eyes. Buckle up as we explore how rising interest rates, the remonetization of gold, and a new era of resource accumulation are reshaping the landscape of global finance. Don't miss out on this eye-opening analysis by Andy Schectman.
For my entire career, my entire life, the COMEX market has controlled the physical market. The paper market has controlled the physical market because of the leverage and because of the fact that very, 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 very few, less than 1% of all contracts issued stood for delivery. Now, in a world where we see massive industrialization and wealth in the countries that are accumulating it all, like China, like Russia, like Saudi Arabia, like all the countries in the Middle East, like all of the countries in the BRICS that are growing in their wealth and in their middle class and in their industrialization. It's a different world. And they know that gold is remonetizing. They don't care about the relationship between real interest rates and the price of gold. They don't care about the strong dollar. They don't care about any of this stuff. They don't care about these correlations, right? They just want the gold. And they don't care about technical analysis. They want the gold because gold is being remonetized all around the world. What is gold? Oh, that's right. It's the only other tier one asset in the world. Who's been buying it all? Oh, that's right. All of the central banks. And so they don't care about the traditional relationships, if you will, where, well, the dollar's going up and real interest rates are going up, so we should sell gold. No, they don't care because they know in a world where the world reserve currency has been weaponized and you have Janet Yellen going all around the world talking about confiscation of the $380 billion in Forex reserves of the Russians. We're going to confiscate it to fund the Ukrainian effort. Why the hell would anyone trust us? They won't. Not to mention, we've chosen inflation over austerity. We're accumulating $1 trillion in debt every 3 months right now, and our bond market has been a disaster. So my feeling is that as rates have gone higher, which is typically bad for gold, it's not. It's bullish for gold. Why? Because in this environment, to me, what the rising interest rates symbolize is the rest of the world not wanting to buy our bonds, which will ultimately lead to monetization by the Fed. They will have no choice but to come in and backstop buying up all of the treasuries that no one else wants to buy. And all roads lead to the same place. And so I guess what I'm simply trying to say to you is that I believe there is a fairly decent chance. Now, it's almost foolhardy to say this. It's taken a big risk to say it because it's never been this way, but it almost feels like they have lost the ability to control the paper price of the commodities. Now, take another step back. What did China buy a few years ago? Oh, yeah, the LME, the London Metals Exchange, which is basically all the base metals, right? So it's not just precious metals. Have you noticed what copper's been doing? They're buying up all of the metals of the base metals, like copper and rare earth metals like nickel and zinc and aluminum and everything. All the soft commodities like wheat and soybeans and corn. This is what Zoltan Pozsar said was going to happen. And if you look at what we talked about a week or two ago, or maybe 3, I think I mentioned this to you. I just want to bring it up one more time. The interview that was done by the Kremlin aide Yuri Ushakov, and where he talked about the new BRICS currency and said, yes, it's coming. And it will be a currency of 2 baskets. One, a basket of the local currencies of all of the countries involved. And number 2, he said it would be a basket of commodities. But let me read to you, everyone, once again, what he said. We're going to put all of this into context. He says, the second part of this program is price. He says, for the moment, Price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID pandemic, the price of oil fell to nearly zero. Now we know that he was wrong with that. It was negative 40. It's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Price formation with this new currency should get rid of the Western exchanges of commodities. They know that we have been suppressing the price. They have been using this. I've been saying it over and over and over again. They have been using the suppression against us and taking delivery, draining the exchanges, massively draining the exchanges all around the world. You and I started talking about that in 2020 with the rise of the others, which are the sovereign wealth funds primarily. They are draining the exchanges. So they've gotten to the point where it's becoming harder to do that. And then they went to exchange for physical, where they buy contracts in the West, move them to the LBMA, and take possession of it there. That's getting harder to do. So what do now? They turn up the arbitrage sheet and say, we'll pay over $3 an ounce more for your silver and 70, 80 more for your gold for now. Maybe it goes higher. But what I want people to understand is that if I were being completely forthright with a gun to my head and someone said, you tell me right now, man, is it different this time? And it feels different to me. It really, truly feels like they've lost the ability, at least with gold, to hold it back. Now, there is a 90% correlation throughout all of human history between gold and silver. And silver will come along for the ride. But in 3 weeks' time, to see gold up over $200, almost $250, then again, that doesn't happen. And to see it close the way it did on a Friday night, that doesn't happen. To see silver open up yesterday morning 7% and trigger limit stops in China, that doesn't happen. Something is different. And I think the mechanism that was designed to control the prices of commodities worked in a world where the West ran supreme.
Ready to dive deeper into the gold and silver market revolution? Keep the conversation alive by sharing your thoughts in the comments below. Don't forget to like, subscribe, and hit the notification bell to stay updated on the latest insights that are reshaping the financial landscape. Together, let's continue to unravel the mysteries of the market, challenge the status quo, and pave the way for a future where knowledge is power and opportunity knows no bounds. Until next time, stay informed, stay inspired, and stay empowered.